Hello, this is Coach Mike from winningstockcoach.com. I'm going to get started with my weekly market overview video for the upcoming trading week, the week beginning March 23rd, 2015. Over the past 4 weeks or so, 3, 4 weeks, we talked about the decline into two potential Fibonacci targets, but the key point that we would be looking for was a weekly close back above the swing point of 2051.82. 2 weeks ago, we had that. We got within our standard 0.5% of one of our fib targets, got the weekly close above. That led us into last week's market overview video with the anticipation of an up move, which we also got. Now, last week we talked about an up move that we would have a resistance point 21.10.30, and we actually just barely failed to close the week above that. So in reality, we're still at a point where we would have to identify that if we started to pull back, it could just be a double top, and should we break that point, we would want to be looking for 2178.38 as our SPX swing target point. Now over to our DJI, that's the Dow Jones Industrial Average, which welcomed Apple to the elite group of 30 this past week. Very, very similar type deal to the SPX. We came within our 0.5% of our Fibonacci point. We've made a positive move, and we also fell shy of breaking the prior weekly swing high point. At this point in time, for long positions, which, last week we talked about any positive movement after the close we had, the prior week, any positive movement we would use as entry for longs. At this point in time, your support level, 17,749.31 cents, and your resistance point, 18,132.70. We're just a few points below that. I wouldn't be surprised, honestly, to see Monday maybe just like, it wouldn't even really be a noticeable gap, but a slight gap over that. Until that, though, we've got to realize exactly what we're looking at. There is still the potential at the double top that you could pull back from. That's why our support level is important. Otherwise, I think if we can break that swing high point, 18,140.44 cents, we will be looking at an up move to around 18,871.36 cents. The Fibonacci extension targets, those are ones that, have been accurate 54 consecutive market moves within a 0.5%. So that's not an exact number, it's a general vicinity. Within a 0.5% of that would be my expectation. Now, if we do come up and hit that, I'll expect probably just another 1 to 2 week pullback and further continuation into the end of May up to around 19,286.09. But let's not look at this one up here because we've got to break this one first before we can get there. But that would be my anticipation overall of how we would trade. To be quite honest, the FOMC minutes that were released this past week, there was some concern that now with verbiage changes, we could see a interest rate increase probably in June now, which would really be perfect to what I've been talking about the past few weeks about that higher point target that I thought we'd see by the summer sell-off at the end of May, where stuff does start to sell off a bit. They didn't raise the interest rates and the market shot up, but anybody that has read the report needs to view a few points that I do think are important and why I think watching these technical points that we're talking about in this video are so important. First off, yes, they didn't raise the interest rates. Woohoo. But they made some implied verbiage that makes it seem like they could sooner than originally expected. Also, they acknowledged extremely low inflation numbers. Now, to some people that don't understand how inflation and deflation work, low inflation seems like a great thing, but really it's not. When you approach dangerous levels into that deflationary zone, economies basically stop. And the only way to fix it is extremely drastic increases in the interest rates from the Fed. We saw that last year from Turkey and Argentina, a few others over the past few years, and that has been basically the only fix to deflation problems. So if our inflation numbers don't get up closer to that critical area of 2%, which is really the healthy level, and where we're sitting right now in that 1.4 or 1.5 range, that is not a healthy level, which does raise some concern. Also in that report, Janet Yellen spoke about GDP decreases, wage decreases, overall economic decreases, all negative things that she did acknowledge to actually be factual data at this point. But it seemed like the market forgot she said that as soon as in her interview she said, but I think it'll get better. So with no data to really support it getting better and actual data to show that it is getting worse again, or at least a decline, when I say worse, it does leave me a slight bit concerned that I don't want to get my hopes up for an exact price point. Now, I never do that anyway personally. You know, just as I went through and spoke about this double top area and the concern there, I approach all my trading that way because those are points that we do need to acknowledge and that we do need to prepare to take an action on should we see a specific price reaction at those points. So it's just a simple thing, but I'm to the point personally over these last couple years with what I've heard from the Fed and whatnot. I really could care less what they say anymore. It's pretty much anything good they say is speculative. Everything bad they say that's supported by data is just kind of overlooked. Um, and really it starts to concern me a bit, but at the same time, I'm not going to miss out on opportunities. So, as long as the market's going to be stupid and continue upwards, I'll stupidly follow it as well, with a little bit of a smarter approach. Going to move over now to the RUT, the Russell 2000 Small Cap Index. We talked last week about the just very slight decline and how we had held a swing point that we didn't see replicated through the SPX, the DJI, and that if we continue to break out this week, that you might want to watch them small caps rally because the RUT could hit 1332.27. I know for me personally, I did take very, very small entries on a couple small caps just for this breakout play. One of them did get moving. Another one's been pretty flat since I did. That's why it's just small first entry type deals for this move if we continue to push. But overall right now, as far as the RUT, you've got to honor a support level 1233.37. But I think you can stay long in small caps so long as that's held. I think anybody that looks at intraday red candle, green candle game and tries to play that is just selling themselves short. So as long as the indice is showing that potential for a breakout move, I think you need to stay long right now in your small caps. And finally, over to the NDX, that's the NASDAQ 100. Again, very similar. Actually, this one came right to our projected support point, bounced up off of it. And unlike the S&P and the DJI, we actually did break the weekly swing high point on the close. So what I would expect here carrying forward into the new week is truly that so long as the NASDAQ 100 holds 44.4305, that you continue to see an upwards movement. And the really good thing about that support level is at this point in time, if you're going to get a breakout play, a momentum trade, your support right now is very, very close. So the risk to reward within the NASDAQ 100 is very, very good for a long trade, an upwards move. Very, very small to the risk side of where the charts tell you that you would exit, and about 8 to 9 times that to the upside for your continuation in this long swing. Going to be looking right up here around 46.90.11. This other longer term target, it might hit that 47.25.71 on a good push here, but but really I think 46.90.11 is the area that I'll be looking for. You know, they're so close together that either or would be good. I'd probably start entering trailing stops and such once you got up to this point for your NASDAQ 100 stocks. Um, Overall, this past week was a pretty good week. There were some stocks that I personally had believed were at very, very dangerous levels after long falls that have taken place for quite some time now. Um, you know, you got several stocks that just continue to move higher without any falls, but there were a lot of stocks that were at those dangerous levels, and they actually held up this past week and replicated this bounce, and some of them caught quite a bounce. So I wouldn't be surprised to see a little bit of action this upcoming week. Still, again, with your oil stocks, I think they looked really great this past week. And into some of your technology. You know, Facebook broke out to all new highs. We caught a long swing on that, sold a little bit too early, but still for a nice profit. Actually, a lot of nice profits over the past few weeks on different Facebook trades. And you're starting to see a lot of your cloud-based stocks really start to take off again after, you know, they were big momentum names late 2013, early 2014, and just fell off the edge of the earth up until about the past few weeks. Really started to kind of balance out. Even Alibaba dropped below its low close after the IPO price a week and a half or so ago, but kind of just stayed a little bit sideways, made a nice little pop. There are a couple resistance levels that I would still let it break before going long again, but it is starting to show some promise that even some of these stocks that have been beaten up might start rebounding a little bit. You know, with that being said, that kind of has me looking for some opportunity that I would probably wait until the end of the week personally. For a couple, I'm looking as longer term investments to get in on the common stock buys. Um, but should we get to that point, you know, I think if we just get some continuation of what we've seen, we're going to see a few stocks like even ironically Caterpillar that could be at a very, very investable point here. So good luck in the upcoming trading week, and God bless you. This is Coach Mike with winningstockcoach.com. Just encouraging you to have a plan for your trade, understand the risk and reward, and, you know, overall when it comes to your trading, don't let your emotions get in the way. There's no reason to think, just simply react. And I hope that this weekly market overview video that I put out to you really helps in assisting you with that planning. You know, if you followed it long enough, you've seen the accuracy of it each and every week. And I hope truly that it's helped to produce profits for you.